Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the trading week of July 21st through 25th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. Take a look down below at the description box to start learning and earning through trading with us. With that, let's get into the markets. So as seen here on the daily time frame of the S&P 500 ETF or ticker symbol SPY, we are still sitting at new all-time highs. That's right, we have consecutively made new all-time highs for last week and the previous week before that as well. Now, here's the thing, right? Now, you guys might be noticing that there is a technical indicator shown down below, which I usually don't do because, again, we don't like to use lagging technical indicators here at Charts Focus 1. But the RSI, the Relative Strength Index, is a very significant technical indicator that we like to use here and there. And the reason why I bring it up is that, well, there is a potential bearish RSI divergence occurring here on the daily time frame. And what is that divergence? Well, first of all, the price is consistently making higher highs and higher lows, a classic uptrend, while the RSI, on the other hand, is making lower highs and lower lows. All right, let me make it a little bit more apparent here for you all. All right, lower lows, right, and lower highs, and higher highs and higher lows on the price trend, right, the price action. And this could be telling us that, hey, the markets can be seeing potential exhaustion, and the markets might be starting to press on the brakes, right? And we do tend to see this occurring when market tops form, right? We tend to see this RSI divergence, and possibly on other technical indicators, we might be seeing other divergences. Again, I don't really look at other indicators other than the RSI, maybe the MACD here and there. But again, if there are other divergences occurring across multiple technical indicators relative to the overall price action on the overall markets, I would not be surprised, right? And so with the potential market top forming and a potential pullback, let's discuss where we could see potential supports being formed on the overall market. So first of all, if you do decide to break below the daily 10 SMA, and that's exactly what we did last Wednesday. But again, very quick pivot, and we ended up closing right over the daily 10 SMA. However, does this mean that the bulls are very much in control? No, right? Because this breakage below the daily 10 SMA occurred while we are in new all-time high territory and in a textbook uptrend of higher highs and higher lows. And so what's kind of concerning to me is that even if we still made a higher low compared to this previous low point, so again, Wednesday's low point was at $618.05. And on this candlestick, the low of the day was $617.87, right? We still broke below the daily 10 SMA. So that's a sign and a risk that bulls are starting to lose some ground here, and bears are starting to slowly creep in and come out of their caves. Now, again, in the near-term future, right, short to mid-term future, if we do get that pullback, we need to see a sustained move, a break below the daily 10 and a move below the daily 10 for the short-term trend, right? We need to stay below the daily 10 SMA. But that's not it, right? Because the daily 21 SMA is still currently rising. So that means at some point in time in the short to mid-term future, if we are forming a market top here, we need to break below both of the daily 10 and the daily 21 SMAs to fully tell the bears the bulls that we need to stop buying, right? We need to stop and let the markets pull back and consolidate this entire run-up that we've had since, if you believe it or not, April's lows, right? So yes, we are in a new uptrend, in a new bull market, right? And if you guys didn't know, we have been in a new bull market technically, from a technical perspective, once we broke over the previous all-time high price print sitting at $613.33, or shown by this green arrow here, right? So this is a very, very interesting dynamic that we're looking out for, right? Where from a short to mid-term perspective, we just have to see a breakage below the daily 10 and daily 21 SMAs to confirm that the bulls are losing traction here and that bears will be coming in. And the fact that the RSI is also pointing towards a potential market top forming because of the fact that we have a bearish RSI divergence, we could be seeing a potential pullback for that short to mid-term time frame. Okay, so with all that in mind, right, let's say that we have already seen this break below the daily 10 and the daily 21 SMAs. And again, my kind of guess will be somewhere around 620, where will we be below the daily 10 and the daily 21 SMA. So mark that whole number level, 620. Okay, but what happens after that, right? So if we were to sustain a potential very, very shallow pullback, as I've been suggesting for the past 2 weeks or so, I would say, okay, we should be seeing at least, a 3% pullback from the current all-time high levels, right? So if I were to just give you guys a quick demonstration of that, right? So from last Friday's closing price, okay, a 3% move from the current all-time high price print, or last Friday's close, will be around this area, 608.50, right? Now, as I've mentioned many times in the past, there is a significant area of resistance, previous area of resistance, from 608.50 to 611, okay, nearly a 3-point range here, right? And now, since we are above this range, this previous supply range, okay, or resistance area, this is now considered a significant area of demand or support, right? New area of support. So if we were to have this negative 3% pullback, we should be seeing a complete move downward until we retest 608.50. Okay, so this is our first area of defense for bulls, kind of this first line in the sand area where we need to see the bulls pivoting back up higher to provide a lot more longer term uptrend support for giving us a longer term higher high as well, and higher low as well, right? And relative to this previous low point here, right? So again, we have to expand our time frames when we're talking about a broader term pullback, right? So with this negative 3%, right, we have a good support at 608.50, or a nice demand area from 608.50 to 611. That's great. But what happens when we see maybe more fear coming in, right? Maybe we see some sort of catalyst, like maybe from the Federal Reserve by the end of this month, from the FOMC meeting, or from the tariff deadline, August 1st, where we see maybe we might be seeing another month or 2-week extension from President Trump on tariffs, right? Those are all negative catalysts that could provide and instill more fear into the markets, right? More bearish sentiment. So if that was the case, then we could possibly be seeing a -3 to -5% pullback from the current all-time high prices. And so if you do that, right, from a visual perspective, okay, then generally speaking, we should be around 600 to around 595. And if you guys remember, okay, I was literally talking about the fact that if we were to find any sort of solid long-term support, we should be focusing on that range of $590 to $600. And this is exactly what I talked about last week on the last week's CFO Swinger Watch Report's technical analysis video. So make sure you guys take a look at that. All right, it's the most recently uploaded video on this channel. And so we still fall in line to this wide 5-point range between $590 to $600. And again, of course, the percentages have changed where we move lower, right? Because we've been moving higher, right? The more that we move higher, right, the higher the potential support will be if we do see a -3 to -5% pullback, right? So if you saw a -5% pullback from let's say from Tuesday's closing price, right? A 5% move will be to 590, right? But then again, since we have updated data here, right, from last Friday's closing price, will be around, right, 595 for a -5% pullback. And again, to me, that doesn't really matter, right? As long as we continue to see some good data, right? As we continue to see good price action, I wouldn't mind if we continue to see a slightly upwards move of potential supports if we do see a pullback in the upcoming future. Okay, so again, just keep these general areas of support and demand in mind, right? 611 to 608.50, and then 600 to around 590, right? So 590 to me will be the maximum pain point that will be for the bulls if we do see a pullback, a large -5% pullback, depending on where we start that pullback, of course, right? Because again, well, you guys get the point, right? So, with that in mind, okay, please be focusing, okay, on the daily 10 and the daily 21 SMAs, because they will be the significant pivot point for the bears, right? And if we do lose both the daily 10 and daily 21 SMAs, and again, if you use the EMAs, that's completely fine. If you have short-term EMAs, focus on those as well, because if you break below, your short-term EMAs or my short-term SMAs, that is a very significant warning sign for the short to mid-term future. Okay, so with all of that in mind, let's take a look at our first and last official swing trade idea for this week. So we have VEEV, Viva Systems Incorporated. So there is a major reason why I am looking at this ticker, not just from a technical perspective, but from a fundamental and a potential catalyst perspective, which I have written down in the overall top-down analysis that I provided in the report for this ticker and this official swing trade idea for this week. So please go ahead and take a look at the report itself. All right, it's a 3-page top-down analysis for this specific ticker alone. So please read it before you watch this technical video, right? Technical analysis video. So with that being said, okay, I want to take a look at VEEV because from a technical perspective, it is looking absolutely tasty, all right? And the reason being is that, well, VEEV has really been a very, very strong name since its large, big gap up from its earnings report, right? This is what we consider and call a breakaway gap, right? So officially, a catalyst drove prices to move in such a way that it broke away from the previous candlestick's close all the way up into the earnings reactions candlesticks open, right? A very, very massive move, a 19% move on this candlestick alone overnight, right? And this breakaway occurred from a massive wedge chart pattern as well. All right, so we have these overlapping technical indicators that pointed towards a potential breakout, but then again, the earnings catalyst is what allowed the price to officially break away from this big macro wedge chart pattern, hence the breakaway gap name. All right, so this breakaway gap has continued to make the price continuously go up, and eventually we have continued to stay above this breakaway gap up area, right? And that's significant to me because that clearly indicates to me that bulls really want the price to stay above this breakaway gap, and we do not want to see the price retesting any of the prices that are in between this breakaway gap up area. And that is a very, very good sign and showmanship from the bulls, right? We really want to see the prices continuously staying at these current levels that was caused by the initial bulls that created this impulsive breakaway gap up. Okay, and so with that being said, this overall consolidation that we're seeing here is very, very nice, right? Even if we had these large pushes to the downside from sellers trying to drive the price down on this very, very strong uptrend and very strong breakaway gap, the sellers have failed every single time. And you guys can see that one of these big moves lower every single day, they're accompanied by large selling volume. But guess what? These large selling volumes did not follow through, and we did not see a new downtrend occurring, right? And instead, right, rather than seeing a larger downtrend or a pivot to a new reversal to the downside, we've seen very, very good consolidation, right? Every single time we've seen a shot up in short volume, right, or selling volume here, we've seen very low volume trading the next few days. And overall, the average daily trading volume has continued to fall as we've made this very, very nice consolidation period here for the overall price action. And to me, this screams a squeeze, a potential squeeze that is about to occur where we can have another leg up higher, a second leg up higher where we have a massive bullish breakout to the upside. And I also want to bring up the technical indicator that I'm showing you guys down here, which is the MACD, which I just mentioned in the overall analysis for the markets on the S&P 500. And the reason being is that, well, I want to show you guys that the MACD, or the momentum here, has also died down in a very, very calm and textbook manner where we could see a potential big shot in momentum, bringing the prices and driving the bulls to come back into the stock and giving us a very nice breakout to the upside. Okay, so that's kind of what I want to show you guys here on MACD, right? If you do see a very nice crossover here of this blue line over the orange line here, which again, both of them have come down in a very, very proper manner here, we should be seeing a very momentum-filled breakout to the upside. Now, as regarding to the specific levels here, we've consolidated on a sideways perspective, and we've literally formed quite perfect horizontal levels here, right? We have a 276 support level here, a horizontal support level, and 284 as the whole number resistance level for this overall consolidation phase or period. And at this time, we also have a very, very significant descending resistance trend line that is being formed here, and it kind of parallels a potential chart pattern that we've seen before, and that is, well, this wedge chart pattern, right? So we've had a very similar descending resistance trend line that also coincided with a horizontal resistance level here at 241, right? And this is what occurred here, right? And the price eventually broke over both of these two resistance levels. Again, this descending resistance trend line and this 241 whole number horizontal resistance level. And so we kind of had this similar, very parallel situation going on here with this descending resistance trend line and this horizontal whole number resistance level sitting at $284. And so my official entry point will be once we break over 284.10, then that will potentially give us that breakout over this descending resistance trend line and ultimately give us a nice retest of all of these major resistance levels that we have up here. And so if you guys want to take a look at the complete breakdown, the complete 3-point game plan of this swing trade idea, make sure you guys read the report. And on top of that, if you guys want to make sure you guys catch this swing trade idea using option contracts, make sure you read the report as well, since I have a very comprehensive breakdown of what option contracts you guys should be using for this ticker. All right, and last but not least, I want to take a look at one of the momentum, mentioned ticker, right, from this week, from the MM list, right, and that is Apple. Okay, so Apple is looking extremely strong, and well, when I say strong, in relative to all the other laggards. Why? Because Apple has been a major laggard compared to the overall markets, and that should be very surprising. But I'm actually surprised that a lot of people are not talking about this overall divergence in price action, in strength, and momentum, considering the fact that Apple is the most weighted stock, right, in the overall markets, right, in the S&P 500 as well. So to me, this is very interesting, and I really want to see Apple breaking out of this very tight bull pennant that I've been talking about for the last 2 weeks, and I've been updating you guys constantly about Apple ever since we had that nice initial swing trade on this break. So we caught this entire move up here, right? This entire move up, all the way up into 214.50. Although I personally did not end up taking profits exactly at 214.50. I believe I took profits on this third bullish candlestick on July 2nd. Okay, but again, very good gains. Okay, triple digit returns, right? So from a percentage perspective, by the way. And so Apple here potentially could be giving us another swing trade opportunity to potentially give us a 2 for 2, right? And if we're able to break out of this nice bull pennant, then we can see a potential breakout entry point over 212.55. And again, we have a very major resistance level sitting at this 212 whole number resistance trend line, this horizontal level here on this bull pennant and on intraday time frame. So if you guys want to take a look at this from a 2-hour or 4-hour time frame, okay, so let me actually just mark it here for you guys to have a good visual. And this 212 level will eventually, if you do break over it, since we've been rejecting it every single time, we've seen sellers constantly hitting the price back down at this 212 level. And so if we're able to break over 212.50, another whole number level, and eventually giving us that breakout entry point over 212.50, okay, and giving us that 212.55 confirmation breakout entry point, then we could potentially see that second leg up higher and eventually break over this massive previous target of 214.50. Okay, this is a massive resistance level. Now, I am only thinking that this breakout will occur once we do see the daily 21 SMA catch up, and that means we might be seeing a potential fake out, right? Or a potential shakeout as well. Who knows, right? Maybe it's a fake out, which means we might see a brief breakage over 212, right? Or we just completely move lower and we see this a shakeout of weak bulls that were holding the price during this entire consolidation that formed this nice bull pennant, but they decide to leave once this ascending support trend line breaks, right? And once that occurs and the weak buyers are out, at that point, if we do break below and we maybe come back down to 208, we might be seeing the daily 21 SMA catching up to the price here, right? And if that occurs, we will be seeing a coinciding pivot at this daily 21 SMA and at this 208 whole number level. And that should provide enough support for bulls to come back in and to allow the price to jump back up higher and potentially continue its way up to 214.50 and eventually a lot higher from this point forward. Since again, Apple is a major mega cap laggard that is so lagging behind the overall market. And again, I can't believe I'm saying this, right? And I don't think a lot of people are talking about this just yet. So Apple could be a very good winner in the short to mid-term future. So please take a look at this. And again, it's a very nice sneak peek to our MM list, our momentum mentions list in the report. So again, if you guys want to look at the other tickers that we have in the MM list for this week, please please look at the report itself for this week. Alright, so that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you smash that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. But if you are watching this video when it just became public and you would like to watch this video when it's exclusively sent with the CFO Swinger Watch Report, you simply just need to become a reader of the CFO Swinger Watch Report. Plus, becoming a reader will automatically give you complete full access to the private CFO Discord community where you can expedite your learn and earn trading system. And again, you can expedite your learn and earn trading system with us. All right, good luck, and I'll see you all tomorrow morning.